morning, you're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Wednesday. As inflation is seen to further accelerate, Moody's Analytics trims its growth forecast for the Philippines this year.
The government secures another 12 billion peso loan from Japan to fund economic recovery efforts.
The Bangko Sentral starts circulating an initial 10 million pieces of the 1,000 peso polymer banknote.
And the 3-day local absentee voting for government officials and employees, the AFP and PNP personnel and members of the media begins today. We begin our broadcast with Moody's Analytics trimming its growth forecast for the Philippines this year.
And the research firm cites the impact of slower global demand as well as faster domestic inflation for the downward revision. Moody's Analytics now expects domestic growth to hit 6.1% this year, lower than its initial estimate of 6.4%. It's also well below the 7 to 9% target set by the government. Moody's Analytics chief economist for Asia Pacific, Stephen Cochrane, says the slight easing of the 2022 GDP forecast is due to the anticipated global economic slowdown. He also said that the faster increase in commodity prices may also impact consumption, as household consumption spending accounts for 70% of the Philippine economy.
Now, the country has secured a 12.3 billion peso loan from Japan, which will be used to fund economic recovery from the pandemic. Finance Secretary Sonny Dominguez and JICA President Tanaka Akihiko signed the agreement for the second phase of the COVID-19 response emergency loan support over in Tokyo. The DOF said the loan proceeds would support the Philippines' plans in vaccinating its target population and expanding the country's healthcare system.
Now, the Bangko Sentral may consider a rate hike in June as economic recovery likely gained more traction in the first quarter. This is a departure from the BSP's initial position that it will only adjust rate hikes in the second half of the year. BSP Governor Ben Jokno also tells Bloomberg that there is still no evidence of second-round inflation effects from the demand side. Let's watch this.
Next meeting is on May 19th, and so we'll look at the new data, and hopefully it will show a first quarter growth of maybe around 6 to 7%. And so on the basis of that, maybe we'll wait another cycle, which is we have another meeting in June, and maybe that's the time when we will consider the increase in policy rate.
I want to follow up on something that your counterpart, the Treasury Secretary, Carlos Dominguez told me last week when I asked him about the risk of aggressive Fed rate hikes, which was a big IMF warning hitting individual economies. He said that if the U.S. raises rates, the Philippines will want to follow. You don't want to get behind the curve. But what's your answer? Are you concerned about getting behind the curve or the impact those rate hikes could have?
No, the situation right now is, to me, what makes a big difference is the difference between the real interest rate in the U.S. and the real interest rate in the Philippines. Our inflation rate is around 3%. Mm-hmm. Yours is in the U.S. it's 8.5%. So given that, I think we can afford to wait as to what will be the move of the Fed in the next two meetings. Okay?
So you're not seeing second-round inflation materializing anytime soon or in the coming months?
Right now, there's no evidence of second-round effect on the demand side because, for example, the second-round effect will be in the nature of increase in transport as a result of the oil prices and increase in wages, right? We don't see that happening, okay?
Governor, I just wanted to ask you about peso weakness as well. You're concerned about the currency's depreciation, and how is that factoring into your thinking and its potential pass-through to inflation as well?
Okay, good question. Inflation. The peso has depreciated at about the same rate, or in fact, it's at the middle of the depreciation of the other rate of the other currencies in the region. So we're not concerned about the depreciation. It is within our target range of 48 to 53 pesos.
Now, the Treasury has reported a budget deficit of 187.7 billion pesos in March. That is a smaller deficit than the 191.4 billion pesos deficit recorded in March of 2021. This as the government revenues rose by more than 35%, while expenditures only rose by over 18% year on year. But for the first quarter of the year, the country's budget deficit stands at 316.8 billion pesos. That's versus the 321.5 billion pesos for the same period a year ago.
Growth stall post-election as the World Health Organization, the Health Department, and now even the Octa Research Group all flagging the possibility of another surge in COVID cases. What might this mean for the investment climate in the country? To answer that and more, we have Chris Nelson, Executive Director and Trustee of the British Chamber of Commerce of the Philippines. Good morning, Chris. Thank you for joining us.
Good morning, and pleasure to be here. Good morning to all your viewers.
Okay, so now, again, post-election scenario, post-Holy Week scenario, there are concerns that there might be an uptick in COVID infections here yet again. What would this mean for the investment climate here in the Philippines? And can we afford to tighten restrictions yet again? If not, what should be the strategy here?
Yeah, look, thank you very much. I think, first of all, of course, we've always been a big campaigner and supporter of, obviously, the vaccination program and the boosters. And we've worked very closely with Joey Concepcion and obviously his work, obviously, with Secretary Galvez. So clearly, what we would see is the way to do this is obviously to do the boosters, to be very specific if there was an uptick. And obviously, yes, I think what we need to do and to avoid is obviously any general restrictions. Clearly, the way it was being developed was to have very specific restrictions. But if you take the example of other countries, and I mean, let's just do a comparison with the UK. The UK, of course, has lifted all restrictions, and that's premised, of course, on the vaccination rate, but a continuing drive to boost. So, yes, I think there's a definite need to avoid, obviously, general restrictions, and we totally support the drive and the need for boosting, because that's the way forward, and to keep the economy driving forward.
To what extent should this be required for the business community? I mean, I think the last interview we had with Joey Concepcion, he did mention something like 13% of booster take-up over in Metro Manila. And the vaccination story by June would be defunct because basically you would need a booster by then. But a lot are very hesitant. To what extent do you think this needs to be required and that the unboosted people might face some restrictions?
Yes, I mean, look, this has always been a bit of the debate. I mean, you've seen it in various other countries. I have a lot of experience actually from Portugal. There, they have one of the highest vaccination rates in the world. Boosters actually tends to lag behind because people get vaccinated. But of course, the booster is needed in terms of obviously keeping that immunization rate up. So, yes, I think there's a need to do both. I think we need to constantly be echoing the need for the booster rate. I think let's all be very fair to the efforts of Joey, Secretary Galvez, the IATF, that actually the vaccination rate improved. Now, of course, we also need to be communicating on this because what we don't want to see happen is those general restrictions. Because if I recall your earlier part of your program, I mean, clearly, Moody's has just trimmed the rate of growth for the Philippines, but there has been quite a marked recovery, particularly in the last quarter, and that needs to be getting going. And that's, as you've seen, because the restrictions have come off. So, yes, I think, though, educating a new campaign to really communicate why the booster is such a benefit, but at the same time stressing to people it's necessary to do your work or to go out, yes.
Okay, now talking about recovery, of course, much of that also will hinge upon the implementing rules and regulation of a number of economic reforms that have been passed by the recent administration. We're talking about Retail Trade Liberalization, Foreign Investment Act, and the Public Services Act here. Question now is, since the passing of these measures, have we at least drummed up enough interest here from British investors?
Yes, I mean, I think so. First of all, we're very pleased with the three acts that were passed. And I think that shows a great effort made by Congress. So just a quick recap, that's the Retail Trade Act, the Foreign Investment Act, and the Public Service Act. The Retail Trade Act already has the implementing rules and regulations published. We've already started communicating that and already had one event to promote that to UK investors. We're still waiting for the IRR of both the Public Service Act and also the Foreign Investment Act. And obviously we urge that will be completed, obviously, hopefully before the completion of this administration. And I think that once those are there, there would be a great deal of interest, particularly the Public Service Act, which obviously could realize significant investment. But I just want to stress that we believe that these acts, the passing of these acts, is a very critical move and a very good signal. And I think it will be shown to be a long-term support to the economy. So yes, interest levels are there, need to finalize the implementing rules, but very optimistic.
Okay, and of course, one more remains pending, and that might not happen until, of course, the next administration. That is the RCEP membership's ratification. And a lot of that is also hinged on the contention regarding the agricultural sector, particularly with imports coming in. And we did talk to you off air before the broadcast, and you did mention that the UK has some plans in terms of pork imports here in the Philippines, or other meat. In fact, tell us more about that and how that would, whether there are safeguards to protect the domestic market.
Sure. So first of all, let me also say that we are strong supporters of the Philippines joining RCEP, and there are much more potential upsides for RCEP, and I think that the Philippines will benefit strongly. And I think there has been support given and discussions made by the key people in DTI, which was Undersecretary Gepti, on those supports for the agricultural sector. So overall, RCEP and the joining of RCEP is seen as a very important move for the business sector, and also the UK would strongly welcome that. Now, in the context of our trade mission on British beef and pork, which we're organising, which will be coming here in May. That's in conjunction with the Horticultural Development Board of the UK. This is in relation to the fact that obviously pork imports quotas have gone up because, as you're probably aware, the local herds have been very much hit by the African swine flu. And that was one of the reasons which, of course, had spiked inflation. So British pork and British beef is well known for its sustainability, high quality, and obviously the imports or the exports from the UK to the Philippines for pork, and now we're hoping for beef, have gone up significantly. And we see that as an opportunity and a win-win for both sides. And of course, that will assist also in terms of keeping the food inflation, which was another factor. So looking very much to develop business between the two. We have a number of meetings set up, and it's a reflection that this is one of their first trade missions, obviously, since travel has resumed in general in this post or coming to the end of this pandemic era. And I think it's very relevant to see that they've chosen the Philippines. So very excited. So one, we support RCEP. Number two, this will be a benefit, and we look forward to dealing with, obviously, the UK, Philippine importers for British beef and pork, and seeing that in the next May, 17th to 19th of May.
All right. Chris, before we let you go, of course, the big news still, of course, we're just less than 2 weeks away before the next elections here. We did mention RCEP, of course, is going to be dependent on how the next government will perform. But this time around as well, based on what you've heard so far from our candidates here, are you confident that the next administration, at least who among them do you think will be the most investment friendly here? And what is on top of your agenda for the next government?
Well, look, I mean, we wish, obviously, everybody the best. And we obviously believe strongly the election will go smoothly, and we wish everybody all the best of luck. In terms of policies, I think we've seen all the candidates make references to further economic support. And I'd like to just echo, obviously, what's happened with the current administration. Clearly, the passing of those economic reforms, we would welcome further liberalization of the economy. Let me stress, whenever we deal with the UK, we highlight the Philippines as an important market, but it's also a gateway to Southeast Asia. We'd also like to see the next new administration continuing its investment in the infrastructure with a particular emphasis on the digital economy. That's become very important, particularly obviously as we've seen that grow substantially during the last 2 years. And I think that'll be very important. So we're optimistic. We've seen obviously all the candidates make references to the need to support the economy and the development. And I just like to keep the momentum going in terms of obviously what's happened in terms of the investment in the infrastructure into the current administration, the passage of these economic reforms. And we believe, as the British Chamber, as one of the leading advocates of that, is that this will realise substantial increases in foreign direct investment. So we're looking forward to that.
All right, so more liberalization hopefully on the table. And as you mentioned, we do need the IRRs there set in stone for the investments to come in and trickle in. Thank you so much. That was, of course, Chris Nelson, Executive Director and Trustee at the British Chamber of Commerce of the Philippines.
Thank you very much indeed.
Now, coming right up after the break, we'll check how financial markets are performing this morning on the back of major developments on the global front.
More of that and other stories when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Dani Laurel.
All right, Dan, we are touted as a domestically driven market, but the offshore issues are just too big to ignore. Tell us more about the shaky global sentiment.
Yep, Jess, exactly as you mentioned, global is the story here. S&P 500 slid down to a 6-week low last night. That's amid very disappointing corporate earnings. You also have China's COVID struggle. There's a lockdown in Shanghai, but not just that, it's spread into other cities. Beijing, it's weighing on the growth outlook. Of course, there's also that Fed tightening amid all of these things happening. This as Russia will cut off the supplies to Poland and Bulgaria today in terms of gas. And that is a threat that they made good on. They were already threatening to halt those flows to the countries that did not pay them in rubles. So the euro actually slid to the weakest level versus the greenback since 2017. There might be, gas flows choking there in Europe. Take a look at the rest of the bourses here, just a sea of red. The S&P 500 down by more than 12% since the start of the year. The Nasdaq down by 20%, Jess. Now, RBC Capital told Bloomberg TV, quote, "We know that the sentiment is in a terrible state right now. This is a market that's very, very confused. There's a real lack of conviction in anything that people want to buy in this point in time." And let's take a look at how we are doing. The same story happening, unfortunately, Jess, down by 0.7%, still below 7,000 levels. Yesterday, we already were sliding further. Recall that we had AAA equities, Matt Cabangon, saying he would not be surprised if we fall to 6,500.
But still, domestically, Dan, you have earnings season in full swing and you have a few to break for us. Is that improving the sentiment?
I cannot really say that might be the case because we do have a couple. First of all, let's kick off with Aboitiz Equity. First quarter net income, 4 billion pesos. That is down 53% year-on-year, Jess. And you can see that moving the stock downwards, down by 60 centavos or 1% down. This on the back of their power unit, of course, the biggest unit. They also have Union Bank, which had already reported first quarter results yesterday. That dropped 45% in the first quarter. But you've also got Aboitiz Power, first quarter net income falling by 53% to 2.89 billion pesos on the back of net interest expenses, depreciation, and amortization, plus those outages that we've been experiencing and a typhoon impact pa. So all of these hitting the rest of Aboitiz, and Aboitiz Power also trading down at 33 pesos and 3 centavos. And finally, just quick peek on Meralco, which has also been down by 1 peso and 60 centavos, even as their net income for the first quarter rose 28% year-on-year to 5.56 billion pesos, and capex jumping 41%. But they did mention, this is from COL Financial, they're commenting that it is in line naman with their estimate. It's around 24.4% of the full year estimate, but was nevertheless below consensus, Jess. But they will be set to exceed pre-pandemic levels as, of course, power demand continues to recover.
The Trade Union Congress of the Philippines filed a petition for a 480 peso increase in the daily minimum wage in Calabarzon. This comes just over 2 weeks after they refiled their wage hike petition in Metro Manila. The daily minimum wage hike in the provinces near the capital is at 303 pesos to 400 pesos. But the TUCP pointed out that this has been eroded by inflation to about 268 pesos to 353 pesos, depending on the province.
The Bangko Sentral has started its phased issuance of limited polymer 1,000 bills for trial circulation to lenders last week. Now, the BSP says 10 million pieces of the new bills, or 2% of total polymer notes to be circulated, have been made available to the public. The Bangko Sentral is expected to release 500 million pieces of the new banknotes until 2023 as part of the trial circulation. This will be circulated alongside the old 1,000 peso paper bills.
More areas in Mindanao have now been placed under COMELEC control. COMELEC Chairman Saidamen Pangarungan said the towns of Buluan, Datu Odin Sinsuat, Datu Piang, Mangudadatu, Pandag, and Sultan Kudarat in the province of Maguindanao are now under COMELEC control. That's on top of Marawi City, Maging, Tubaran, and Malaba lang in Lanao del Sur. Pangarungan said the decision to put these areas under their control is based on the recommendation of the PNP, the AFP, and the Regional Election Director. This means that the COMELEC can take immediate and direct supervision over all national and local officials as well as law enforcement agencies. Under the law, the poll body can put an area under its control if it has a history of election-related violence, presence of private armies, and serious threats from terrorist groups.
The COMELEC has kicked off its 3-day local absentee voting this morning to accommodate those who will be on duty on Election Day. For the May 2022 elections, COMELEC records say more than 84,000 individuals have been approved as local absentee voters. Most of them are from the PNP with 47,000, followed by the Philippine Army with more than 34,500 approved local absentee voters. Others are from various government agencies including COMELEC. Chairman Saidamen Pangarungan, Commissioners Aymineri and Marlon Casquejo are all local absentee voters. Now, some 957 media members have meanwhile been approved as local absentee voters. A local absentee voter can only vote for candidates seeking the national positions and party list representatives, senator, vice president, and president.
Okay, we're two, at least, of the 957, Dan, and you're going
that's
to make your vote later.
Very excited, Jess.
Okay, that's a first look into the business day this Wednesday, April 27, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. One good vote. Mask on, wash hands, and stay safe. Philippines, we are One News.